Hi, welcome back to my channel. This video is being made for entertainment purposes only, as I am not a financial advisor. And I just wanted to make a small video, a short video here of what the market's been doing. And today again, we hit all-time highs, not in the NASDAQ, but it was very, very close. But we did in the S&P 500 today hit all-time highs. And this seems to be something that's happening at the end of every week now for months. It seems like we'll have a Friday, every other Friday anyway, we'll have a big run up on the index where it just goes crazy, and you know the stock's just soaring and going up. I'm looking at the QQQ ETF that tracks the NASDAQ 100, and I can't help but see these gains, and it just doesn't make sense. It really doesn't. Some of you young guys, you might disagree with me and say, oh, you're just old, times have changed and all that. I've heard all this stuff before. The stock market's the same it is now as the same it was then. The only difference is we've had a lot of money printing going on in the last year. The creation of $9 trillion pumped out into the economy, and a lot of it has made its way into the stock market. And of course, with Treasury bond yields being at about 1.5% at the 10-year Treasury bond, you know, people are putting their money in the stock market. So it is causing a lot of this inflated, the inflation in the stock market, I guess you could say. But I'm looking at the QQQ ETF, and I remember when I bought these ETFs, I bought 340 shares back in 2002 and 2003. And I paid a cost basis of about $28 a share, and it's trading today at $361. But I remember when I bought these, it just didn't do much of anything for 10 years. It seemed like it just wasn't growing. We were in a bear market. They did shoot up a little bit up till about 2000, and I think it was about 2000 and late 2007. And then 2008, the bottom fell out, and I went right back to where I started back in 2002. So, what I bought back in 2006, 2002, and where it was in 2008, that's 6 years of basically, you're right back to point A. And my biggest mistake though was not buying more of these ETFs in that whole time frame. That was buying opportunities, and I'm looking just in the last 5 years with this ETF, and it's gained 222% in 5 years. That would be 22 years. 22 years of gains in the S&P 500, averaging 10% a year. Of course, the NASDAQ has been a little bit more than that, maybe 12% or something. I don't know. I should have looked that up before I made this video. But all I'm saying is, in the time frame that I bought the ETF QQQ, it did basically nothing for 10 years. It was a flat line. Okay, a little bit of it maybe in that 10-year time, it might have went up 10%. Okay, so I'm looking at this in 5 years to go up 222% is enough for me to just believe that we are going to hit a bear market sometime soon. And this bear market could last for an extended 10 to 15 years from what I'm looking at. And that's just in the NASDAQ. And we switch over to the S&P 500. I know that a lot of you are going to disagree because you think this is different. I'm telling you, it's not different. Past 5 years, S&P 500 up 102%. So that's 10 years of gains in 5 years in the S&P 500. So that's not, you know, as big as the NASDAQ 100, but you know, this is still 10 years of gains we have in 5 years. So, you know, on the average, where the average is 10% per year. I look at these. I look at the margin debt that is at a record right now. The margin debt that's lingering out there. This is we're being set up right now, I think, for a I hate to say it, I know I put some videos on here about stock market crash, and I don't like to say that, but I'm going to tell you something right now. I've got, in my Roth IRAs, I'm sitting 30% in cash right now. I have $32,000 in cash. I'm not putting a dime of that in this market right now. It can sit, because as long as my other's growing, I got that 70% invested, I'm letting that grow. At my age, at 53 years old, we hit a downward trend where this market could crash for the next, you know, 2 to 3 years before we even find a bottom, and then go out on a long bear run for 10 or 15 years. You know, is it the end? No, that'd be a great opportunity for young people to buy. You know, if you're young and you're in the stock market, that's what you're looking for. You're looking for a time frame where you have 10 years of good buys on stocks. But right now the prices are way too high. They're way overvalued. The PE ratios are too high. They're out of sight. And I'm looking at all this, and I'm just thinking to myself, I'm pondering this, and I can't help but believe we are heading for a long drawn out downward trend that's going to happen here real soon. And I know a lot of y'all don't want to hear that, because you think that because you've only seen what the stock market has done in the past 7 or 8 or 10 years. I'm going to tell you, this ain't going to last forever. This bull market that you've seen is not going to last forever. And I know you're probably thinking, oh, okay, Boomer, you're just a bear and all this. No, I'm just giving you facts of what the market does. It's gonna go into it. The longer a bull market extends itself, and the higher these stock prices go, and the bigger the PE ratio gets, the bigger the crash is going to be. It's just all there is to it. You know, I believe this is going to be no less. What I'm seeing now, I believe no less than a 50% downturn within the next 3 years. And what will happen is people will keep buying. And what has been happening, the reason it hasn't crashed, is everybody keeps buying these dips. They're buying the dip, and they're keeping this market going. They're keeping it going. They're keeping it going. And you can see exactly where they did this back in 1998, 1999, and where they did this in 1927, 28, and 29. It was the same thing. The people just kept, you know, buying into these stocks. But sooner or later, these brokerages, these people that have, you know, the big financial institutions, they're going to take their profits. And when it triggers that, this thing's going to be a waterfall. And, you know, the waterfall will go down 5-10%. People will buy. There's a lot of cash on the sidelines. There's trillions of dollars. So I don't believe this stock crash is going to happen fast. I believe it's going to be a long one. I've said that in my other stock market crash videos. I believe this market crash is going to be drawn out for at least 2 to 3 years before, you know, we find a bottom, and maybe even longer than that. You know, because of the amount of cash, people will just keep buying dips, and then, you know, it'll shoot back up, and then it'll just go right back down. People will be taking profits. And it's, you know, right now, the times we're in with the government, with you know, socialism trying to take over our country, these are, you know, the times we're in are not, you know, the stock market doesn't even seem to be real, what we're looking at. I mean, this doesn't even look like reality compared to what our propped up economy, our fake economy that we're going through. It's propped up and faked out by the Fed. But make no mistake, the rich, wealthy people, the billionaires, the millionaires, the big companies, they're going to take their profits, and they're going to try and take all the money for themselves. A young person, what would I say you should do? Don't do anything. Stay in the stock market. And when this happens, buy more. you know, buy more stocks. When the prices get cheap, buy more. Buy more. But for some of us older guys like me, I got to worry. I got to keep some money off the table. I got to keep some cash off the table. If these keeps going up, I'm going to keep selling more and putting more cash aside. I can't go into bonds because bonds don't, you could actually lose money in bonds. You could lose more money in bonds than you're going to lose than with your cash just sitting in a cash account, you know. But at least having the cash available, I could buy some opportunities. If we get a 30 or 40% drop, I might buy some value stocks. I'm not getting into the tech stocks. I think tech's going to take a huge hit in this next downturn. I think some of the tech companies are going to take huge hits. Not going to get into any names of the tech companies that I think are going to take big hits, but you know, 2 or 3 of the companies are the top 10 in the S&P 500 and in the NASDAQ, so the NASDAQ 100. But anyways, I'm looking at this, and I just wanted to make a video on this and basically say that, you know, all that just to get to the point where I'm staying 30% cash, 70% in the market. If you're young and you have plenty of time, 20, 30 years to retirement, don't do anything, you know. Don't do anything, just keep what you got. And I wouldn't be buying any stocks right now, though. There ain't no way in hell I'm buying stocks. You know, I'm managing a couple Roth IRAs for some family members. And right now, for every $10 we buy into index funds, we're setting $10 aside in cash. So it's a 50-50 thing right now until something happens, until we get a major correction in this market before I'm really going to be moving more money into stocks. It's just the prices are too high. It's like buying a house right now. I'm not going to do that. So we'll have to see where this market goes, but I believe within the next year, this market's going to start its downward trend. I mean, actually, I believe before the end of summer, we're going to start seeing the downward trend if my calculations are right on what I see in going on in the market. So we'll just have to see how this plays out, and I hope you enjoyed this video. If you like the video, please like and subscribe as I track this market and we watch it closely to see what it's doing. All right, y'all have a great evening.